General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Right. Okay, 428. Hold on. Let's see. We didn't get it close, but I can just say five, 9. Okay. Definitely expansion. Engage. Medium. It's crazy. This is a crazy drop. Right at 5. Something like open AI scare or something. Do we think this is the anchor? Nah. It's too many wicks. It needs to be cleaned up. This is the lowest down candle. Yeah, definitely a weak low. Yes, anchor point confirmed. No, not yet. Could have a Wednesday midweek reversal. I don't think the terminus was hit today. uneventful New York game session. Mm, all the ADR was taken for the open with the 5 a.m. drop. Let's look at the hour. Got a nice little bounce off the event horizon. This is this old new day opening gap. Closed here, open here. Mad close to this level. Interesting, we didn't come back here. This is the inversion now. Mm, it would be interesting to see if we get sales from here. Because if we come up and take this high, leaving this low, that'll be nice for a low resistance liquidity run back down. Otherwise, I would want to see some type of sell from here to back up. Tomorrow is Fed fund rate in the PM, and it's all those top 10 companies earning. Don't trust the sell unless we retest the inversion level. Version FEG price rejects. Otherwise, I'm looking at this push down. As a fair swing to engineer. Liquidity. Take a look at the daily. To respect the order block is noted. It should be on the right. Okay, we do have a nice reaction off the daily order block on the 4 hour. But here Just looking at it from here, it's not very strong. The wick, it touched it too many times to really even be worried about it. It's there, but it's not effective. It should have had a reaction that created a fair value gap. It didn't do that. So retracements, clean this up, or we would have to close. The close above here. So far, no body closes. And we kind of just consolidating. Hmm. It's a 50% retracement here. 618 is here. What is this? 27893. Step 0.4.9. And I could take this off. And yep, that's perfect. Yeah. I don't even like buying under here because, or buying, if we close above here, it's kind of like a thirsty buy just because it leaves this. But I could technically do it just because leaving this fair value gap untouched is super bullish. It's just tiny. Alright. Let's do the day. Reaction off the daily order block. Not super strong. I wouldn't be surprised if we push lower tomorrow. And bought up from Tuesday's low. From under Tuesday's low. SPX did. Okay. Let's take off that. It's just too many lines right now. Let's get the screenshot first. Mm-hmm. Same as Nas. Nothing stands out here but the weak lows. It's an old new week opening gap we in. Oh, okay, that's from last week. Did we ever get that 7200? That's insane. No closes in here. And this has like the weird element of the balanced price range. It's kind of significant here. Let's make this a different color. I don't think I have a balanced price range color. It looks too much like my candles. Well, it sure isn't blocking price. So going above this is going to be bullish. Okay, that works. It's not too crazy looking, and it's not just taking over the chart. The CLT said this one was going to be more rangier too. We started off pretty strong with that buy yesterday though. BPR. Tried to Okay, this is full on time to sell everything. I think the only thing that stopped this from being like the ultimate sell is we did close below the low. This, in fact, this looks like manipulation. So Monday, 50%. Let's take this off. Stay below here, we can sell. Sell from here. Above here, we're buying hard because we already swept both sides of this candle. And then this, like, we wouldn't have to come back for a minute. The only thing about this is this liquidity here. Right? This is this major. Selling this to go here is good because this is not a weak high. We don't need to run this high. I think NASDAQ, you do. You do. Matter of fact, as I seen it, just left that chart. It's too many highs up here. This high needs to be ran. And we didn't sweep both sides of this. We got this gap here. So that's the main difference. That means everything because this, the fact that we swept this puts an order block up here. Price going up here should get rejected hard. It should get rejected at 50% on Monday. I wouldn't even expect nothing soft bias. I would say higher just because I know they're not going to cut rates. And Kevin Walsh is bullish and earnings is bullish. Let me make sure. Take this line off too. Close below Monday's low. See if we did on NASDAQ. Yeah. But on NASDAQ we did. Low prices. Makes no sense. Going into Wednesday with the soft bias. See the stocks. See what the rest of the world looking at. Okay. Still not good. Monday, we took the low on the actual stocks. Do we got the BPR? Kinda. It's a little bit more refined here. Hold up. Stocks. Spot got Monday's low. The low still looks weak. Looks weak. And the shares. The order block with Friday. Creating equal lows. So selling here makes sense. Might not get to sell above Monday. If I wanted to. Still gotta have an ideal trade location. Let's go. No BPR over here. That's that volume imbalance. Let's go look at SPY on the daily. Indecision day. Indecision day. A little bit lower. Rebalancing this gap. That's what it kind of felt like we was doing. We wasn't really going anywhere. So you can kind of see how it played out in the stocks. On SPY, it wasn't no gap. But NASDAQ is what I'll be trading anyway. Let's look at this. And it's mainly priced from overnight session because this is regular trading hour. This is like the right now, whatever they call it, electronic trading, and this is pre-market. This is regular trading. I forgot what they call it. So they produce balance the volume of balance on QQQ. Close the doji. We really just wait in for a Fed fund rate. Boom. And today was an engagement day. What was I going for? Okay, I was going for the gap fill. Yep, so market open. Hold on. Gap fill after the retracement. Oh, yeah, still going for that gap fill. We never got it though. Framework play out. Let's look for higher prices. by pattern narrative. I don't think nothing really stood out as far as like, oh, I gotta write that down about price. A new day opening gap is sick. Yeah, there was nothing new. Yeah, nothing new stood out. The biggest takeaway was how slow price was delivering. That was a sign of chop. Tomorrow, what are the earnings for tomorrow? Because we already know the Fed fund rate going to change. Amazon, Microsoft, Google, Meta. Okay, that's a lot. Amazon, Microsoft, Google, Meta. Earnings. And Powell. Press conference. Fed fund rate. So we nothing new stood out. The biggest say how slow price. That was a sign of chop. And big news. Calendar for Wednesday. Okay, doji is a word. All right, that's that on that. Y'all have a good day.